Welcome back. You're watching us here on Bazaar Morning Call. In case you've just tuned in, the GIFT Nifty indicates a cut of almost 100 points at the start. The lower end of the trading range of the market would be tested today. What also will be tested is whether the Nifty Bank completes its or continues its breakout and how the mid-caps perform. Let's welcome Prakash Diwan now. Prakash, good morning. Good to see you in. The thing that we're watching out for today would be the fertilizer stocks. You know, on Friday, we saw a big cut in all these stocks after an even bigger move in the previous two trading sessions. A lot of hopes were on some sort of GST rate rationalization. That hasn't happened now. So do you think all of that up move will be undone in the next couple of days? At what level do you buy them?
Good morning, Mangam. So I think what we saw on Friday was primarily about a profit booking after that, very sharp run-up that was there in the previous few days. The anticipation on the GST, of course, was one of the triggers, but there are lots of other positives, as I shared even last week, that could start working in favor of the fertilizer companies. Number one, you probably have gas pricing, which is expected to be benign. So a lot of the naphtha-based fertilizer units, which are primarily into urea, would probably start doing well. The assumption is that the positive monsoon will also be, something that the government might leverage to increase farm incomes or farmers' incomes, and that means that fertilizer usage would probably get much more balanced, if you will. It's not something which is today so easy to kind of calibrate, but the government definitely will do something where it's a win-win for the consumer and for the companies. And the third thing, if you really ask me, fertilizer companies have really been a pocket of largely PSU-owned segment, but hasn't got kind of re-rated. So there's this whole thing that there's some positivity that would rub off if things continue on the PSU spend. So yes, there could be some sentimental setback because there's this anticipation of the GST Council recommending a cut of that 5%, but it really doesn't move the needle much at this point in time. I would believe after that profit booking, you'll again see some portfolios start wanting to build it for the longer term.
Prakash, morning. Any thoughts on TBO Tech, the recent listing? Issue price 920, blockbuster day one. The stock is already at over 1,500 rupees, which means a 70% return from issue price. And today you've got a note from Goldman Sachs where the target price is, I think, 1,970. So a lot more upside even from current levels. Where do you stand on this travel platform player?
Good morning, Rima. Yes, you're right. It's kind of very stark that today you get a report even after that 17-18% of an up move, which gives you a 24% upside. And if you read through that very clearly, it's talking about a lot of reset on the PE expansion. It's not. Of course, there is an element of some sort of an earnings growth and all, but it indicates that large brokerages have started moving slightly lower on the market cap ladder to find opportunities because most of the stuff in the top 500 maybe is probably fully valued. And this is going to be a trend, Rima. I'll come down specifically to TBO Tech, but I'm just telling you, this will be a case where fresh paper will probably start getting re-rated by most brokerages in a favorable way because of the fact that some of them are coming at a time where valuations are probably moderate enough and not this. In this case, I believe the valuations are getting into stretch territory very soon. And even if, let's say, you were to buy at these levels of 1,600, wait for that 25% upside, which is a price objective, it may take fairly long. So, it will also go through consolidation. You'll probably see exits come up 30 days and 90 days. All of those exits have to get absorbed. And at these levels, there'll be very, very high levels of temptation for anybody to be able to book profits of almost close to about 70-80%. So I would refrain from buying at these heady valuations at this point.
Do you have a view on car trade, Prakash? Because, the market cap of the company about a year ago was close to around 2,500 crores. They had cash of almost 1,100 crores. Now the market cap has moved all the way up to 4,000 crores. They still have the benefit of the cash that they have on their books. There is a large trade today, so the selling overhang gets out of the way. The stock is still about a 50% distance away from its issue price.
Yeah, so the view is this where you see the price, Bangla, it's justified for the simple reason that this is a business that is waning. It's not something for the simple reason that it's fairly competitive. You really don't have the ability to scale up just because you started off at a time where there was novelty around it. The other thing is that most companies themselves have started, doing a lot more work that on the pre-owned cars and the segments, the premium segment that are selling. You look at even the largest player like Landmark on the distribution side, on the car dealership side, they've also started focusing a lot. Listen to their con calls very clearly. Their focus is on pre-owned cars. So that's something where these apps or these platforms probably haven't been able to give you that disruptive edge, and hence probably they won't receive that premium. So I would believe stay away. This is the same thing which happens in a lot of companies. We had a map company the other day, CE Infosystem, doing so well because of a re-rating and some upside that was brought in. But you have a Genesis now wanting to get into the same space as well, and they have enough data to back it up. So there, you never know what's going to probably slow down the anticipated growth in some of these companies, which are trying to disrupt. But then you will have probably some other disruptor coming in and making things very different, look different. So I would look at much more sobering and boring businesses than some of these.
A quick word on Ujjivan Small Finance Bank. I don't know if you had a chance to go over the investor call takeaways, but they are talking about initial signs of stress in the MFI segment. And therefore, they've pruned down their growth guidance. So earlier it was 20 to 25%.
Yeah.
Now they're talking about a growth of 20%. They've increased the credit cost guidance too. And one, Axis today, by the way, has downgraded Ujjivan Small Finance Bank to a reduce from an add. One, your thoughts on Ujjivan Small Finance Bank, and is this going to impact any other stocks? Because the stress areas are Punjab, Haryana, Gujarat, Kerala and UP. So which other players get impacted?
No, absolutely. I'm glad you brought this. Very, very good observation. But the fact is, any kind of a move towards farm loan waivers might not impact the MFIs directly as much as they do to some of the PSBs. But the culture out there definitely kind of starts getting very difficult for them to be able to grow at that pace with collections getting into the same, balance in the same way. It usually doesn't happen. We've seen that in the past. And what the recent announcement would trigger is you'll probably have some of the more states, more likelihood of states like Maharashtra and Punjab and all also kind of going through that. So it's going to be fairly stressful because this overhang will always kind of keep valuations in a little bit of a softer band. Now, what happens to other companies that are there? A lot of the MFIs and small finance banks which have been growing in rural pockets or trying to build their strengths in rural pockets will definitely get impacted. Especially the ones who are primarily focused onto agri loans. So, Grameen is one of them, which has a fairly large portfolio. Of course, it has its own strengths, but they will also get impacted. But I would believe there will be a shift because NBFCs offer you a lot of alternatives. There will be a shift to smaller, businesses like Five-Star Finance. I keep saying, look at the segment that these guys cater to. It's so promising, and it's fairly resilient as compared to this thing. So while credit access might probably have this thing a little bit of a shake off, you'll probably have businesses like Five-Star Finance which will do well because they have a fairly decent size and an assortment of products which are not absolutely agri focused and more SME. So that's where you'll have to see that shift. But this is bound to be slightly more. I'm sure we'll talk about this in the weeks to come. It's not going to end just with the day's change on Ujjivan's re-rating.
Prakash, we were just discussing this entire Quant mutual fund saga. In the market circles, how are they reading the implications of this on our market?
So, it's quite early days, to be honest, to figure out what's the extent of potential damage that could happen. You'll probably have to wait to ascertain what's gone wrong and what's the extent of that stuff that's gone wrong. And if you go to the precedents that we had from another mutual fund where this happened, so as Prashant rightly said, it will depend on where the culpability lies, whether it's at the broker's end, whether it's one of the team members in the fund itself. So till that's there, we really can't figure out. But my sense is, markets don't respond to these kind of things in a panic mode. What it does is it gradually erodes the level of confidence on some of the systems, some of the processes that the fund follows. And you'll probably see some discerning investors not vacillate towards the fund in the future. But if you really ask me, I don't see any, except for a sentimental sell-off which some people might want to do. There's not a panic that's expected. So We'll probably, we'll have to wait for more details to be able to pinpoint specifically where things could kind of be more impactful.